Hello, we are back. Happy New Year to everybody. We are officially in 2024. I can't believe it, to be honest. Um, but I'll be honest, this year's looking a bit mad. It's looking a bit mad. We've got a lot of stuff planned. We have a lot of stuff planned. Want to be as productive as possible because this is going to be the year where I personally believe that my breakthrough in trading is going to take place. So this year, 2024, your boy is going to see some sort of profitability slash success. Coming up to my fourth year um, in this market now. So I'm hoping with everything that I've learned about myself on the charts and combining it both together. Dude, you're gonna have to get out. Get out. Can't have you whining like that. Go lay down somewhere. Um, and yeah, combining it all together, everything that I've learned about myself, about the charts, um, about the world, to be honest. Just using everything now in my arsenal to actually crack down and make something of myself. And yeah, with that being said, lads, I just wanted to introduce this new series that I'm going to be starting. It's going to be called Locked In. And essentially what we're going to be doing is near enough every day or every other day, I'm going to be on the charts, back testing, practicing. I could be demo trading. We could be live trading. Like you're gonna see everything, literally everything. The way I journal, the way I deal with my emotions whilst I'm trading. Um, what else? How I manage trades whilst they're running. Not emotionally, I mean in terms of like actually handling the trades. And a few other things not really coming to my head at the minute. But yeah, the point is 2024 is going to be rampacked with productiveness and greatness, right? So make sure you're fucking tuned in. Yeah, make sure you're listening and enjoy the wave. Ride the wave with me if you want. But sorry, one sec. Yeah, no. Oh yeah. This year is the year. It is the flipping year. Without further ado, we will jump straight into the charts. Straight into the charts. And so as you can see there, I've mapped. You'll see this in a second, but what does this say here? Price. If price breaks this low, then gold is headed for 2047. 47? Ah, what an idiot. So basically, we was up here and we was playing around. Gold hadn't quite broken this level. And I just made a little note. If price breaks this low, then gold is headed for 2047 to 46. 2047, 46. Gold has absolutely smashed past it and has wicked into this area here, which I believe is the next point of call for gold for it to start playing around and collecting some more orders, as we've just gone from A straight down to B in 1, 2, 3 candlesticks. So yeah, now that we have reached this level and we've had a nice little push away from these highs. What I'm going to be waiting for is a small little pullback, I think. Because on the daily time frame, this is the thing with gold. When the higher time frames are lining up, it's just heavy, heavy momentum. And to be honest, there's a daily fucking fair value gap. Price could come straight into here. We could roll off and then break back up to the upside. That's just one possible scenario. But the fact that we've had a huge ass wick of what's that? Like 700 pips. It just makes it not nice. There is room for gold to come back up to here. And obviously the higher time frame structure is clearly being shown with higher highs, higher lows, higher highs, higher lows. This is a higher high here. Well, it's not a high high, sorry. We've not broken this area. We failed to create a new high. So if it's a long stretch, if price comes down and breaks this level here, then that will be a break of structure. And what I'll be waiting for following this would be a pullback to take out some liquidity to the upside. And then a rollover for it to come and follow the structure. Obviously, that's if it breaks that low. But for now, gold, I'm just going to be tracking it day by day, following its every single footstep, level by level. Because for any of you that are new to trading, lads and ladies, listen to me. The best way, okay, the best way to get better at trading is to pick 1 to 3 pairs and live those pairs out every day for as long as possible. Get to know these pairs like people in your family. Oof. Because look, when you do start learning the pairs, right, and you learn them like your own family members, you really start doing wonderful shit, such as this. Okay. So we're tracking GA right now. And obviously, funny enough, I literally set this last night. Here's the video. Can't even see it. No way. Anyways, you can't see it, but that's that analysis. I took a video last night after I set it. And the reason that it's managed to do this is because, as you can see, we was coming in lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, no, no lower low. Okay, we didn't break this. So okay, now we're looking. Boom, price comes back up here, takes out these. We pull back down again into this order block down here. Um, sorry. And then, so yeah, we pulled back down after creating this little upwards move. We came back into this order block. Um, and then we reversed, which is when I saw it last night. And then you notice these cool little things. So going from the bottom of this price action, which is here, that that is a London session. Sorry, lads. I'm about to be disturbed. I'm about to be disturbed. Someone's about to come into my house. Well, not someone, shall I say, my girlfriend. So the dog's gonna bark and it's about to get noisy. But anyways, none of that's important. We got a London low right here. London session low formed at 8:30, right? And that was the bottom end of this right here. This very last low that was formed. Okay. So after that low was formed, we set this and then we wait to see what happens. And this is where, like, you could have caught a trade from here straight up to your zone because you know that all of this area here has been broken to the upside. Yeah. Price came above this area, came above it. And then you know that after that new high is formed, you wait for the pullback into this region. Boom, take a trade up to your zone. But that's not what we're waiting for. We want to see accumulation. We want to see a buildup of orders. And we want to know that when we're entering the market, it is at a time where the money is going to come in and actually move liquidity. That's what we're looking for. The areas of liquidity to be swept and orders to come in and bosh. So we've seen the lower lows come in. We've seen the orders that slowly die out, selling pressures getting weaker and weaker. Boom. We cap out at this low. Okay. We break structure to the upside, taking out all of this. And again, and then we come back, testing again this London low formed at 8:30 on Wednesday, the 27th of December. So after forming the new sort of structure and on the smaller time frames, we've pulled back again, not breaking the low. Then we've pulled away. But notice how this time it didn't break. It didn't break that area. It didn't go above it. It didn't go above it. So what you wait for there is a pullback into, so what you want to do is find an area down here. Very cool. So price hasn't come back into this area properly. They're like wicked into it, pulled away, pulled away. If you drag it across, price makes its way back to it and then into it, pulls up above. And then look, can you see here? It's kind of cheeky the way it's happening. People are buying from here. People bought from here. And even potentially here. People buying. So it's come down to take all of these buyers out of their trades. Bosh, bosh, bosh. Each time people have tried to buy, it's come back beneath. Stop loss underneath here. Boom, getting taken out. Then again, people buying, up it goes, sack, boom, comes down, takes out them buyers. Then we see some accumulation, mini buyers, retail buyers. And then what happens? Bosh. We come out, we take out the stop losses. But then this whole area here, okay, let's just move that out of the way. Move that out of the way. So look, let me just draw this on. Okay, so it started to form a mini little uptrend. This is retail money trying to get into the market. But the big boys say, nope, we're taking you lot out. Yeah. Order block right here. It comes into this order block, collects the best price. And then after making these new mini higher highs, sweeping that liquidity, it comes up, makes a new high, pulls in, boom, comes back up again. And then this time we drop straight into this perfect area of imbalance, which is this rectangle here. Okay, that is imbalance from top of that wick. Okay. So the top of this candle here and the bottom of this candle. We had a wick in there, but it pulled up. But it didn't really, it probably wasn't confirmed. Look at all these small candlesticks. Just horrible. So what does it do? It then pulls into it again one last time during the evening, coming into the next day. So the whole of January, the whole of the 2nd of January, it was just building up money, boom, came in to collect into here, rejected this area, 3, 4, which by the way, London lows, London lows, London lows, US low. So yeah, this is a whole US low. But price didn't come back beneath. We wicked into this fair value gap, and then slowly we made our ways up to here. So if I caught this trade, that would have been 137 pips, and with a 23 pip stop loss. And yeah, so that's GA. That's the reason why. That's a little breakdown as to why I set out this buy opportunity. But yeah, going back to what I was saying at the start, it's very good to live out live out the pairs that you want to trade day by day. Just keep tracking them, um, following the levels. That was one thing I used to do until you get familiar. Um, Go on a higher time frame, mark out these whole levels, 2, 1 to 9, 1 to 8, 1.7. And then you start tracking it within these levels, like 2, 1.9. Price has literally just come beneath 1.9. So now we work between 1.9 and 1.8. And we can literally just like track week by week, month by month, level by level. And then over time you get used to how the pairs act when they come in contact with these levels. Look, price breaks that one, wicks it once, boom, straight down to the next one. Bit of manipulation going on. Boom. 1.7. Here's another little cool trick that I know about as well. Using your Fibonacci, finding 50% of these zones, right? So that's 50% between 1.8 and 1.7. And you can see we've come in, rejected, tried to pull away, but no. That is liquidity there. Bankers took that out, took out them the buyers, gave them a little bit of profit, took them out again, using the 50% of 1.8 and 1.7, which is 1.75. Very key levels for GA, gold, 50s and 100s. Very key levels. So yeah, that's another little cool area to go from. And as you can see, the 50% range all up and down the chart comes back, gosh. And then look, all of these areas, you just leave it. You don't trade, and you can just miss all of this manipulation and trickery that these institutions set up so that retailers lose their money. So yeah, you're just watching this melt, rejecting your 50%, melting, breaking this region, melting. Probably came into look 1.65, 1.6, and then we rallied back up again. It's the whole numbers. 50%. That's where the candlesticks started reversing, and we had no closures beneath this line. So we rolled back up, breaking structure, new highs, pull back into this region, creating a higher low. This is also a fair value, a weekly fair value gap. Price came into it perfectly after creating the new high, and then we followed to make a new high, higher low, higher high. And now we banged our heads on 2000 again. So we could be in for a long-term reversal back down to these levels, for example. But yeah, look, as you can see here, the last area of support was this up. Didn't quite come up here. This is in essence, a lower high. Boom, we came down, didn't quite make a new low, failing to breach. This is orders coming in, people trying to buy the market. But the institutions have said, nope, we've reached our levels that we want. Okay, we're now going to take it to a better level, somewhere down here. So what you'll see now is, now that we've had this sweep of this liquidity here, that's a swept all of this. Can we see further downwards momentum? And literally, very simply, we're going to be waiting for price to come back into areas like this and roll over, okay? And if it doesn't roll over from here, then we will be taking, we'll be taking out these highs. Price will come up, take out all the sellers that have got in the market here, stop losses all above here. We'll come back up to around this level, at least. At least. And then after we've taken out all of that money, we could then roll over for a huge bearish move. But for GA at the moment, long term we are bearish. Short term we are bearish, intraday I mean. So that means the smaller time frames are bullish because we want pullbacks, okay? Up into these higher time frame regions so that we can sell for the main direction. Okay, and that is how I predicted the buy, because I know that a pullback is imminent. And simply observing price action, making new lows. Okay, cool. So that is where the change of character happened. Right here. As you can see, price broken it. So we've pulled back, failed to make a new low past this. Yeah. Test in it, like basically tested it. And then again, we've pulled up to the same area, not quite touching it. Kind of weird how it's done that. I'm going to use this crappy order block as a place for it to make sense, because obviously 1, 2, 3, 4, 5 times we came into this area. And finally, we've broken it after creating several lows and failing to make a new low. So it was quite simple. When I see that this bottom wick didn't get broken, and I see this rounding off, and then pull up a newer pullback to about here. Pull back into this region, the bottom of this. Why can I make that more accurate? The bottom of these wicks. We came into it, wicked out, tested it, broken above, tested it again. And now we've actually swept that whole area. So that gives me an indication that we are definitely headed up towards here. And it's just a case of tracking it and following. But that's it for the first video for today. I just wanted to have a little introduction, nice little chart session, give you a brief idea of what's to come. And then in the next video, there'll be some more explanations, some more, just more detail of what to look for. And yeah, got a lot on the mind, a lot to say, a lot to share, and a lot to do. But, thanks for listening. Thanks for watching. And make sure that you zone the fuck in for the next video. Okay? Love, peace, and guidance, my brothers. Peace out.